Hello everyone, my name is Nicholas Reid from Reid Corporate, and on behalf of Trigg Mining, ASX ticker TMG, it's my great pleasure to welcome you to this special investor webinar following the release earlier this week of the scoping study for the Lake THROSSELL sulphate of potash project. Thanks for your time today, we really appreciate it. Well, it's been a remarkable journey so far for Trigg. This is a company that listed on the ASX just 2 years ago to the month in October 2019. In a very short space of time, it has discovered the large-scale, high-grade Lake THROSSELL deposit located east of Laverton in WA, established a maiden JORC resource of 14.4 million tonnes plus a significant exploration target, and just earlier this week it unveiled an independent scoping study marking the first key step towards development. This study has confirmed the potential for Trigg to become a potential top 10 global SOP producer and a leading second-generation developer in what is a really exciting new industry for Australia. The scoping study shows that, once ramped up, Lake THROSSELL will produce 245,000 tonnes per annum of SOP over an initial mine life of 21 years, with attractive economic and financial parameters. There are limited global producers of SOP, and a significant proportion of global supply is chemically manufactured from muriate of potash through an expensive and environmentally unfriendly process. By contrast, Trigg is one of an exciting new generation of Australian SOP producers that offers an ESG-friendly alternative source of domestic production from a naturally mined source. To tell us all about the Lake THROSSELL scoping study and the company's incredibly exciting outlook, we're very pleased to have both Trigg's Managing Director, Keren Paterson, and Chief Operating Officer, Dr. Tony Chamberlain, on the webinar this morning. Keren and Tony will run you through the scoping study presentation, and then we'll open the floor to questions. Can I please remind everyone watching to use the Q&A tab on your webinar browser to log your questions, and please remember to send them in during the presentation so that I have time to put them directly to Keren at the end. Without any further ado, it's my great pleasure now to hand over the podium to Keren to kick off this morning's presentation. Welcome, Keren.
Well, thank you, Nicholas, and thank you everyone for tuning in today to this webinar on the Lake THROSSELL sulphate of potash project scoping study. Just to take Trigg back to in a little bit of history in our story, as Nicholas said, we listed just 2 years ago, and Lake THROSSELL had not experienced a single drill hole at that point in any exploration phase. This is a pure greenfields discovery. It is potentially a top 10 global producer, as Nicholas said. But before we get into those details, I want to talk a bit more about why Trigg exists. And it started with a purpose to build mines communities can be proud of. And I cannot wait to talk about just how sustainable the mining process of this is, and also what it can do for agricultural output. But before I get into the detail, we do need to go past some cautionary statement slides, which I urge you to read in your own time, and to explain and to talk about where Lake THROSSELL is. So it's a project in Western Australia. It is a Tier 1 location, and it sits on the Great Central Road. So it has exceptional transport logistics because that road is being upgraded to a highway, and we'll have bitumen to the mine gate before production commences. It is a large deposit, so we announced the maiden resource just in May this year, so this is quite a rapid story to get through to scoping study at this point. It is it's over 14 million tonnes of sulphate of potash in the drainable resource. There's much, much more there in the ground, but we're just focusing on what we can sustainably harvest from the water resource. And as I said, it is sustainable mining in that we're not looking at an open pit or a large rock waste dump in this process. It is about pumping water with the potassium already dissolved in the water and putting it in evaporation ponds, harvesting solar energy to produce ultimately a really natural potassium and sulphur fertiliser, which provides 2 of the 4 macronutrients necessary for plant growth. And without these fertilisers, we just don't have the food source or food security that we need for the agricultural output to feed the growing global population. So it's incredibly important to secure our food, but also it's a very clean fertiliser that versus alternatives will increase the sustainability of the agricultural sector as well. So I'm very excited about the components there that really deliver on our purpose. As Nicholas said, we are talking about a big project over a long mine life. That production rate of 245,000 tonnes is more than twice the expansion case at one of our peers that just started producing commercial product this week. So we are talking about a project to scale with an initial mine life there of 21 years. And in that, we're talking about abstracting less than half of the resource that we've identified, and there is a lot more upside yet in defining further resources at the Lake THROSSELL project and nearby. CapEx, 378 million. We've included a really large contingency there at this stage of 70 million, and we've got a lot of upside there as we talk through what we've done on a pretty conservative basis, I believe, in this scoping study to make sure that we've got a really solid foundation going forward as we look to de-risk the project. The cash operating cost there of 340 Australian dollars is equivalent to about 250 US dollars. And in our assumptions, we've used a $550 per tonne forecast in US dollars, whereas the current spot market for sulphate of potash is around about 700 US dollars. So again, we're making sure that this is a sustainable long-term project. With that, we're looking at creating an EBITDA of around about $97 million a year over that life of mine. All of this puts Lake THROSSELL in the top 10 global producers for sulphate of potash and the bottom of the cost curve. So it's sustainable economically as well as environmentally. So the scoping study team, again, just making sure that this really is a well-studied, well-de-risked project. It is a new industry in Australia. We are all learning, and the best thing we can do is learn from our peers that are moving ahead of us, because this is a long-term investment. The study team has contributed. There's been a lot of contribution in this study. In fact, we've got many hundreds of pages of internal documents doing that de-risking process. And at this point, I'd like to introduce, as Nicholas said earlier, Dr. Tony Chamberlain, who has a deep background in chemistry, doing studies, building projects, especially here in Western Australia, and comes to Trigg with a number of years of experience in solar evaporation of salts as well. So I'll hand over to Tony and he'll take you through the details of the scoping study.
Keren's been through most of the key assumptions that underpin the scoping study. We used an exchange rate based on 1 September, the 73 cents US cents per Australian dollar. As Keren said, probably the most key assumption is the SOP price. So we have used 550 US dollars per tonne. We engaged CRU, market leaders in SOP market. Based on their analysis, they predict that the SOP market will remain strong over the next 5 years with an average of 578 US dollars per tonne. We also did a peer analysis of our peers of recent SOP projects, and they also indicated that the average that used by our peers of recently released SOP projects, that was averaging over $550. So we believe our SOP price is at the conservative end of the price ranges used by various projects, and so we think we've got a pretty strong foundation for our results. Life of mine, as Keren said, we've got 14.4 million tonnes of resource at 10.4 kilograms of SOP per cubic metre of brine. Over the 21 years, we extract 5.9 million tonnes of that, which is about 40% of the resource. So we're really confident moving into early next year when we do additional resource development that the life of mine will extend well beyond the 21 years. In terms of recovering the brine, we have a network of surface trenches, 110 kilometres. That's our main source of initial production. And as the brine from those surface aquifer is depleted, we progressively install additional bores. Nameplate production with our ramp up hitting in year 4 and 5, we'll hit nameplate at 245,000 tonnes per annum of granulated potash. In terms of payback period, indicated resources, during the payback period, it's underpinned by 82% of indicated resources. So we've got a very strong base there for our cash flow coming from more proven resources. And over life of mine, we've got 70% indicated resource in the current mine schedule, and that will grow. CPC were our lead engineer. They estimated the capital costs for the project. So the capital was 378 million Aussie. And as Keren said, there's a large contingency in there at the moment of 25%. So that's about $70 million of contingency. Over the first 2 years, as we're building the project, we do incur operating costs of about $34 million, and that's capitalised as part of the project. So the total funding task of the project is $412 million to build the project and get through construction. Cash operating cost is $341 a tonne Australian. In that, over $100 a tonne is logistics, getting the product to Fremantle. And obviously one of the key things that we'll be looking at in the pre-feasibility is how we can optimise our logistics and bring that cost down. Again, we've taken a very conservative assumption where we've got minimal backhaul, less than 5% backhaul of our product and our trucks coming back to site. So that's one of the things that we've assumed in the project, and that's one of the key things we'll be looking at going forward in the pre-feas, where we can optimise our trucks coming back to site. Free cash flow, pre-tax, $97 million over life of mine. That's a life of mine average, including the ramp up, and then a very healthy NPV of $364 million using an 8% discount. That will grow as the mine life extends, and then 18% internal rate of return, and more importantly, only a 4.5 year payback period. So the project is large. Lake THROSSELL is a large paleo valley. It's 40 kilometres in length and it's averaged about 5 kilometres in width. There's two main aquifers that we are targeting, the surface or superficial aquifer, which is from surface to 25 metres below ground, and then the basal aquifer, which is at the basement of the paleo valley, and that's about 50 metres in depth. The way we extract the brine, we have a series of network trenches, 110 kilometres, and that's our primary source of brine for the first initial mine life. That surface aquifer continues to extend well beyond, and currently our modelling is showing that that's depleted after 24 years, so that's beyond the 21-year mine life. As the brine and our extraction from that surface aquifer slowly declines over the mine life, we then continually supplement the brine extraction with submersible bores, initially starting with 22 bores, and then we progressively increase those to 112 bores by year 18, and that provides the brine for the process. As part of the scoping study, we did a preliminary layout for the project where we've got 17 square kilometres of halite crystallisers. So one of the things we have to do is remove sodium chloride from the brine before the potassium salts start to drop out. Those halite crystallisers are located on lake, and that's to reduce capital cost. And then once we remove the bulk of the sodium chloride, we then pump the brine up to our KTMS crystallisers, or kainite type mixed salt, and that's where the potassium salts start to crystallise. We've got 9 trains and one of 3 cells in each train, and then one train remains offline at any point in time where we're mechanically harvesting that salt. We take that salt from the crystallisers, we haul that to the process plant where the KTMS is actually processed and refined to sulphate of potash. Like every project in WA, we're self-sufficient. We have a fly-in, fly-out workforce, so we have an airstrip, we've got a 120-room village, we've got a power station that's using trucked LNG and supplemented by a 5 megawatt solar panel array system. Access is through the Great Central Road. So as Keren said, that's currently going through an upgrade and it's been bitumised, so we'll have sealed highway all the way to our front door. And our product is currently trucked through quad road trains to Leonora at the rail terminal and then railed to Fremantle in 20-foot sea containers. As part of the process, we have waste salt, which is then backhauled onto the lake and stored in a cell, as you can see in the layout on lake. So the process flow sheet is well proven. It's all the flow sheets from all the inland potash projects are effectively the same. So we crystallise initially pump the brine into a series of crystallizers. We remove all the impurities, predominantly sodium chloride or halite, and then the potassium salts start to crystallize. We get that KTMS, we harvest that, we haul it to the process plant, and then that's crushed. It undergoes conversion where we convert the kainite to schoenite, and that's used by recycling mother liquor from the end of the process. Once we get the schoenite crystals, we then have to remove any residual sodium chloride that's present in the slurry, and we do that by flotation. There's two different types of flotation. There's direct flotation or reverse flotation. In our flow sheet, we use direct flotation where we're recovering the schoenite from the pulp. We then collect that pulp, we dewater that concentrate, and then that schoenite is heated to 50 degrees centigrade by adding hot water. And when we do that, the schoenite decomposes and we produce potassium sulfate as a crystal. After the SOP crystalliser, it then goes into a leach tank. We still have some residual schoenite staying in solution. So we give that a bit of time to dissolve in the leach tank. And then once that's dissolved, we then centrifuge and dewater that potassium sulfate crystal. And that's dried, compacted and bagged and then put into sea containers and sent to market. It's a final product. It goes directly to customers. When we heat this, going back to the SOP crystalliser, when we heat that solution at 50 degrees, some of the potassium dissolves and we want to recover that potassium. So what we do is we go through a secondary schoenite crystalliser where we chill that solution to 15 degrees centigrade, and during that chilling process, it drops out schoenite. We then recover that secondary schoenite through a centrifuge, and that's recycled back to the SOP reactor. All the liquor that's remaining from the process gets recycled back to conversion or back up to the crystallizers. So there's no potassium losses at the end of the circuit. And then the only out for any potassium is through the waste halite that goes back onto the lake. All right, so I'll hand over to Keren. She'll go through some benchmarking.
Well, thanks, Tony, and thanks for that very good explanation of what the project will look like. One of the things we want to make sure that we're doing in this new industry is that we are going to de-risk this project, and I'm very much about doing what I say I'm going to do. So important to me and the board in this case was to benchmark against other feasibility studies, scoping studies and pre-feasibility studies to make sure our assumptions are at least in line and preferably on the conservative side. And that gives us further upside, but it also gives us confidence that we really do have a project that is likely to be constructed. This slide is showing you the capital cost of those peers. And all of these peers are also inland brine projects. They're all in Western Australia. And it may look like a lot there, but it shows every single study that has been done to date and the capital cost estimate. Trigg mining sits on the upper side of that trend line and shows that we do have room possibly to move to reduce our capital cost, but also that we've been quite conservative and making sure that we are funding the right project. We also did that with the operating cost, again making sure that we're learning the lessons from their peers and making sure that we are looking at things fairly conservative at this early stage in the process. Again, our operating cost is above that trend line. Sustainability is also about economic sustainability, and as I mentioned earlier, the scale of this project already at this scoping stage indicates that Lake Throssell is likely to be a top 10 global producer. And that's not just the primary product that Nicholas talked about earlier, but all the products of sulphate of potash. There is a secondary process. It is a chemical process where muriate or potassium chloride is put into a blast furnace with potassium sulfate heated to around about 800 degrees to create an ion exchange. And that manufacture is a chemical sulphate of potash. And for every tonne of that, there is 1.2 tonnes of hydrochloric acid that needs to be disposed of. So that creates a very high cost floor in the sector. And with the natural endowment of the salt lakes in high evaporation environments like Lake Throssell, there is a natural low cost of production, and again also a long mine life. So Trigg and Lake Throssell is looking to be in that lowest cost quartile, even with those conservative assumptions that we've inbuilt into this scoping study. So a global top 10 producer, lowest cost quartile, definitely sustainable from an economic perspective. And sustainability is so much more than making money. That's incredibly important to create a project that is going to return a strong dividend to shareholders over the life of the operation. But it also has these great other impacts. The first one being environment. Because it's mining, without mining, there's no drill and blast, there's no truck and shovel, we are sustainably harvesting the water from the aquifer using solar evaporation. It's inherently sustainable in its process. We've also factored in about a third of our energy source at this stage is solar energy, and we'll be looking at ways that we can make sure that we're as close to zero carbon as we can in this product, so that farmers and our agricultural and our food supply is as low carbon as possible. Agriculturally, it's a fantastic product because it doesn't have any deleterious elements. Muriated potash, an alternative product, has chloride in it, and that contributes to soil acidity and salinity. Farmers rely on rainfall to flush it out and down the waterways, and that contributes to changes in the pH chemistry as well of the river systems. So using sulphate of potash on broadacre as well as the high nutrient food crops where it's traditionally used improves the sustainability of the agriculture sector. It also increases drought tolerance, which is really important, especially here in Australia, and frost resistance. So we have much more robust crops if this is used. It also increases the quality, the touch, the taste. Like when you get a tomato, for example, and it just is full of flavour, that's because it's full of potassium. And the nutrient benefit, we all need about 4,700 milligrams of potassium, and it comes from our diet. Every day, 4,700 milligrams every day, and that is from our leafy green vegetables and other food sources that contain the potassium. It's essential for life. It's important for us to exist and everything to exist on the planet. Socially as well, when we're talking about a long mine life, we are located on the traditional lands of the Nudgera, and I'm looking forward to opportunities that can create not just employment in the project on a fly-in, fly-out basis, but local employment opportunities as well. It's a state project, it's an Australian project, we'll be paying state taxes, federal taxes and royalties, and contributing to the national good of Australia. There is so much more we can do as we progress the project too over that long mine life, and I look forward to working with our traditional owners in the area to create sustainable community outcomes on the social aspects. Governance, we are ASX listed. Even before we were listed, we were treating this company as if it would be. So we have a strong board, strong governance systems and processes, and we're already looking at mine closure planning because what we want to do is make sure that this is the most sustainable project that we can build. So Trigg mining is all about building mines communities can be proud of. This is just the beginning of the story too. So at Lake THROSSELL, everything that we're looking at here is on that central granted tenement. We've got additional tenure that expands the exploration potential there of another 2.5 to 9.5 million tonnes of sulphate of potash in that exploration target. And that's a long strike of THROSSELL under our current tenure. So what we're looking at is potentially expanding both the mine life and maybe even the production rate of this project. Furthermore, along the same channel as Lake THROSSELL is Lake Yeo. Lake Yeo project is in fact a larger area than Lake THROSSELL. Sitting on that same channel, we haven't been out there yet, the tenements aren't granted, but it does look like from all of the geophysical work that we've had a chance to look at, which confirmed Lake THROSSELL and why we listed this company with this project, is a potential repeat of Lake THROSSELL. The focus is on building Lake THROSSELL first, but there is this potential expansion of mine life, and should it be another project, we'll have to work out what we do there. But it's very exciting to have all of this tenure on this channel that is high-grade potassium, all 100% owned by Trigg. So development timeline. In Western Australia, the critical path to building this is making sure that we've got all the right environmental permits in place. So the first thing we did even earlier this year, once we knew we had the discovery, but before we announced the resource, was to commence the baseline surveys for that. So we've already done the first half of the year, the autumn surveys, and we're out there currently doing the September or the spring surveys for the baseline environmental data that will help us be able to put the scoping document into the department to start the environmental approval process. We want to make sure that we really do de-risk this as much as possible. So we are going to go through the very important stages of scoping, which we've just completed, pre-feasibility study and feasibility study. It's really important that when we're building this, a long project, capital cost, we're making sure that we're spending shareholders' funds in the right place. So 4.5 years is our current timetable to work towards for construction. So in summary, Lake THROSSELL is set to be a top 10 global lowest cost quartile producer. We listed 2 years ago and hadn't set foot on that ground. We have worked on this very, very diligently and look forward to the next phases. It has outstanding economics. It is a multi-decade operation, and that initial mine life is the initial mine life. There is a lot more to come. It is located in that world-class jurisdiction. It's Western Australia. It's a solid foundation for building a mine. It is a premium product. It is Australian-made and it's natural. We have significant upside with exploration, and the global megatrends mean that we're going to need more and more of this product. The demand is there for sulphate of potash, and we've already started the pre-feasibility study because we can't wait to bring this to market. So I'll hand back to Nick and answer any questions we might have.
Thanks very much, Keren. Great presentation. Thanks to Tony as well. We do have lots of questions that have come in, and just a reminder to everyone watching, thank you to those who have submitted questions. Please use the Q&A tab if you'd like to send any follow-ups. But before we go to the online questions, Keren, we did receive a number of emails from shareholders in the lead-up to the webinar today, and I'd like to just address that first. It's around the circumstances of the release of the scoping study and the market reaction. So we did have an email from a long-standing shareholder who says, at the webinar, can you please cover the reason for the trading halt and the market reaction? I, for one, was surprised, he says, by the trading halt, and even more surprised by the announcement at the following the lifting of the halt. My expectation was for something rather more positive and upbeat. Now, he said that he in fact topped up his holding following the release, but he raised a number of points which have been echoed by others. So if we could break it down first, the trading halt, first of all, can you just explain the reasons for that and why the company went down that pathway?
With scoping studies, the ASX likes to make sure that everything is done to their standard. So we had completed the scoping study, and that was issued to the board. The announcement was ASX, and we needed to make a disclosure. We're under continuous disclosure obligations. So we either needed to disclose the scoping study or go into a halt while we awaited that review process. That review process was completed on Monday evening, and that's when we came out of the trading halt on Tuesday morning.
Thanks, Keren. Now, the study itself, scoping studies are a challenging thing for small companies. Do you want to just offer a few comments around that process and some of the constraints that face a company like Trigg in putting a piece of work like this out to the market?
There is, and this has been a lesson for all of us to learn in this process too. There is a lot of rules and regulations around the scoping study and what we can put in there, and the balance around the really conservative assumptions that are required as part of being on the ASX to make sure that it is the documents we put up are all compliant with all of those rules. So it's a very challenging phase for an exploration company to transition through that scoping study, and to be able to put economics on that just shows the robust work that the geologists have done in that resource. And as part of that scoping study announcement, the back of that is about a 60-page resource report. There's a lot of substance to what we've done, and I've been feeling over my career as this has evolved, the requirements have evolved, that the scoping studies of today were the pre-feasibility studies of the past. There is a lot of rigour in what's going on in scoping studies these days, so it's a lot to lot to trust, I think.
So presumably a lot of the foundation work in place now. So hopefully the next stage it'll get progressively easier as you move through the phases, the study phases.
Yep, absolutely.
Now the market reaction on the day, Keren, I know difficult one for you to address, but can you sort of give shareholders a bit of commentary around that, or perhaps a view? We noted that there was some escrowed stock that by coincidence I think happened to be coming out at this time. Can you perhaps explain to people what escrowed stock, what that potentially the implications of that were for Trigg?
Yeah. There was it all coincided with our 2-year anniversary on the ASX, and or sort of considered promoter shares, so people that supported the Trigg story since doing the deal on the tenements that are part of the core of the project in July 2017. Their shares came out of escrow, so they were able to freely trade them, and it coincided. And unfortunately, we all felt very flat that day. They were a couple of shareholders were looking to shift their parcel out, but it does mean that we had a lot more new shareholders come on board that really believe in the story. So it's unfortunate timing, but I think that we'll recover from that quite well.
It seems to have already bounced back, and hopefully will continue.
Great.
I'll go to some of the online questions that have been coming in. First one comes from Al Jung. He says, how long or how many years will it take for the potash industry in Australia to be fully established and exporting to the rest of the world? 5 years, 10 years? Can you offer some views on that?
Oh, I think 5 years could be pretty real. If that's our development timetable for THROSSELL. Callium Lakes announced this week that they're already making commercial product. Salt Lake Potash is looking to do that in the first quarter of next year. And that will be 3 projects in production in 5 years' time. Fantastic.
Question from Lachlan. What are the plans for funding the project? JV, debt, capital raising? It is early days, obviously scoping level, but could you offer some comments on funding strategy moving forward?
Yeah, as Nick said, it is early days. Euclase Capital have been part of this journey with us for about the last 6 months looking at that. We have needed the scoping study to really put some flesh on the bones on what we're looking at so that we can talk to offtake partners, we can talk and work through the funding options. That's all to be worked out as we progress and de-risk the project, but we're really confident that we've got a product that the market needs. I've already had inquiries from offtake partners, so we just need to work through the details of that and get the agreements in place.
That is another question that's come up, is where you're at with offtake. At what stage do you in a project like this, do you seek those sorts of engagements, and has that process started yet?
It has started, but it is early days in that, and I wouldn't expect an offtake partner to sign an agreement until we have an ore reserve, and that's at the pre-feasibility stage. But I'm really, really confident that we're going to have that all put in place.
A couple of questions that have come in as well, Keren, relate to the broader sector, and obviously there's been some positive news this week from Callium Lakes, but there have been issues with some of the other players in the space, recently well publicised issues. Mm-hmm. Can you offer some commentary on what Trigg is doing, or what it will do to avoid a repeat of some of those issues?
Yeah. It's been really important to me that we're not in a rush to be first and cutting corners to make sure that we are first to produce, because this is such a long life project. To me, it needs to be built right and built efficiently and effectively. So our strategy right from the beginning is to be quite happy to be a second mover in this space, learn the lessons from the peers, absorb the knowledge, what to do and what not to do. You can learn both sides of the coin in that, and really try and aim to build a really robust project where we don't have those surprises that some of the peers are experiencing at the moment.
Okay, now I have a question here relating to shareholding, so I want to put all these questions to you. This is from Bruce Dixon. He says, just interested in why the ASX suggests that Keren and Mike Ralston sold a total of nearly 10 million shares at the end of June this year. Can you address that?
We've definitely not sold. Mark and I hold about 10 million shares between us, and I tell you what, we are buyers. In June, we did a capital raise rights issue, and Mark and I both subscribed in that. And I perhaps think that the notification for a change in holding of directors may have been misinterpreted, because that's our holding.
You definitely haven't sold any.
You're definitely not selling.
Right, thank you. This is another capital raising question from Glenn Watkins. You have addressed this already. He says, what's the plan for future capital raisings? Do you expect to continue to raise capital through shareholders? He also does note that Trigg has raised capital twice since the IPO, at both times at a lower price than the original IPO. Do you want to just offer a brief comment on that?
Yep. Well, firstly, the IPO was about funding the initial exploration phase, which we completed in the first few months really after listing. The discovery at Lake Throssell justifies the extra work that we've done, and with a few $1 million since then, we've now developed or built up a resource base that we can put this scoping study across to justify a mine life there of around about 20 years. So I think we've really proven that we can very efficiently use shareholder funds to build something, and we are going to need to raise more money as we go. But the whole strategy is we've got a very lean team. We're doing this smart and effectively, and really definitely not looking to waste shareholder funds there. It is very much about building this project and keeping focused.
Excellent. Next steps, Keren, can you talk us through what happens now that you've done this, you've achieved this milestone?
Yep.
You have outlined a development timeline, but maybe if you could just sort of focus on the next 3 to 6 months and what happens with Trigg now. You've got this base in place. Where does the company go to from here?
Well, from here, it's continuing that environmental approval process, because that is the critical path to construction at this stage. And then building up the data. So we need to expand the knowledge in the resource to be able to convert that to an ore reserve. So that'll require some more drilling. We're planning to do about equivalent amount of air core drilling that we've already done to date, and then put some water bores in. So that'll be about 5 to 6 water bores across the project area to pump the basal aquifer and confirm that sustainable yield that we can get from that aquifer. Also, looking at tenement grants, expanding the exploration footprint as well. So there's a lot of upside there on exploration success. Every hole we put into this aquifer comes back at a really similar grade. So we know we just need to expand that footprint really of the drilling, and continue with some chemistry work. We need to start doing bigger and longer term evaporation trials to confirm the process flow sheet. So there's a lot of work to be done over the next few months.
What about Lake Raisin, Keren? Where does that fit into the scheme of things? You had a resource on that before Lake Throssell, I believe.
Yep.
Is that part of a grander plan for the area?
It's about 100 kilometres to the south, and it's about half the grade of Lake Throssell. So our focus is very much on building that production hub at Lake Throssell, but it does feed into that bigger picture. So Lake Yo, 35 kilometres to the south of Lake Throssell, exploring that, and then also Lake Raisin, which has got I think 5.5 million tonnes. I just don't have the number on the top of my head, but it's another substantial project, but it's very much down the track on the mine life.
Fantastic. We've got a great macro question here from Sandy Brill. She says, what is the world demand growth profile over the next 5 years to the end of construction?
Look, it's all about population growth, reducing areas of arable land, needing more and more fertilisers. Sulphate of potash is a niche fertiliser market. It's about 7 million tonnes per annum, because it's high cost to farmers. So if they can get away with using muriate, like in the broad acreage environment, they have been using that. But there is this transition. So I'm really optimistic around this whole industry even pushing out more of the muriate and creating more sustainability in the agriculture. But it's growing at about, I think, 1.3% per annum. We need one of these projects that we're talking about in Western Australia to come online every single year to keep that growth profile. But there just aren't the salt lakes globally with these resources. So there will be more and more Mannheim, but again, that's right up at the high end of the cost curve.
And we're talking about an import replacement opportunity for Australia here as well, aren't we?
Yep.
Can you just talk a bit more about that, a new domestic source of supply for Australian farmers?
Absolutely. Australian farmers have been importing both their muriate and sulphate of potash for pretty much the history of agricultural output in Australia. So we're entirely reliant on imports. And at times, farmers really struggle to get their hands on enough potassium inputs for their crops. Because if you think about one crop, for example, like wheat, 5% of that grain is potassium. And it's just no longer there in the soils after the intensive agriculture. So it's incredibly important that, for me, that we create more sustainability in our agricultural sector through sources of fertiliser, natural fertiliser that we can supply domestically, and then create an export market for it as well.
Just one final one, Keren, just on the investment proposition. You've talked about news flow and what's coming up.
Yep.
For an investor looking at Trigg today, what do you see as the big re-rate points over the next 12, 24 months?
Well, the scoping study really should be a particular re-rate point. We've now put the flesh on the bones of this discovery, and justifiably this is, a top 10 global, possibly top 10 global project. And we are going to continue to develop that and de-risk it. So the next steps are to increase the confidence further in that resource, have a measured and indicated resource that we can convert to an ore reserve and continue to build that story.
Fantastic. I think we've covered all the questions well and truly, so I'll just ask you to wrap up with maybe 2 or 3 key points, key takeaways for people.
Great, thanks Nicholas. Well, thank you everyone for tuning in. It's very exciting to be talking about a scoping study 2 years on from listing at a greenfields discovery project. It's a long life, top 10 potential global producer at the low end of the cost curve. It's about sustainable mining for sustainable agriculture. It's sulphate of potash, necessary nutrients for plant growth. And thank you very much for your interest in Trigg. We can't wait to continue to tell you more about the stories as it evolves. Thanks, Nick.
Thank you very much to Keren and to Tony and to the team at Trigg Mining. Fantastic growth story. Plenty of news to come. There are 2 important things to watch out for with Trigg in the next little period. The one is that Tim McGowan and the team at Share Cafe over in Sydney, Corporate Connect, are updating their research on the company. They did a fantastic research note by independent analyst Joe Snowman a couple of months ago. That's currently being updated and I understand will be released in the coming days, and I think it has a very eye-catching price target associated with it. And also Keren will be presenting at the Resources Rising Stars Conference here in Perth, in person for those based in Perth. We'll be at the Perth Arena on the 14th and 15th of October. Should be one of 41 fantastic resources companies presenting over there. And of course, that entire event will be live streamed for anyone who registers will be able to tune in and have a listen to 2 fantastic days. So for more information on that, please go to our website, www.rrsinvestor.com. Thank you very much, everyone, for your time this morning. We hope you enjoyed that webinar. Thank you to the Trigg team, and if anyone has any further questions, please feel free to reach out to us here at Reed Corporate or to Trigg Mining. Thank you very much. Have a good day.